So friends, let's continue with supply demand, which are order blocks, with order flow, which is the step-by-step mitigation from demand to demand or from supply to supply, imbalances, and we're going to put this whole thing into practice. Okay, so I'm going to show you how I approach this with the higher time frame because that's super relevant. And yeah, we can make also even a few examples which are right now pretty new, right? It's probably the best. So first of all, you can see here already what order flow. You can see it already. Now let me just explain you how a typical and clean supply demand area looks like. Well, first of all, what do we look at? We'll look at the last up move candle before the down movement starts, right? So that's what we see actually here. That's the last up move candle before a strong down move. So we admit that this is our supply zone. In this example, it is red, but we do not care about it. So the better example would be actually this one. So the last up move candle before the down movement. But I wanted to show you also a red candle because this is also the case that it is not really important right now what color you see here. It is important what the price action behind it was. And as you can see, with this up move, what we've determined or what we've learned in our theory is that they buy the market, right? So they buy the market to the upside so that they can sell through it. And you have here a few things that you need to understand. You see here price breaking here some form of structure with this down movement. In this case, it is even breaking a major structure. So that's ideally also the case that it's breaking something. And what we can also see is that price here swept liquidity. So it made a liquidity grab while it created the supply zone because they staged the market like this to bring people buying it, and then it dropped down. Now these are just two candles, right? So it just makes a little bit right now nonsense to understand, okay, really on lower time frames you will see that here the price really staged everything. More cleaner it looks already here on this example. You can see here clean that this is the liquidity sweep, but you can see how price here was just in a clean uptrend, right? Before it created this up move candle. So you can see it started to move up, down, up, down, up, right? That's what it did. And it broke, of course, also this candle. So it went below, down this candle. And it also broke some major form of structure. So whenever it's even breaking a major form of structure, it's super interesting for us, to look for something. What else do we look in order to say, yeah, this is a valid supply zone? Well, we also look on imbalance. And where we see the imbalance, well, look at this. This is exactly the space which, price did not filled in while the move down. And then as you can see, price then come back to the supply zone to fill in the imbalance, but also to touch the supply zone and then to drop down. So this is the imbalance. And what we can also admit is always that this imbalance, which needs to get filled, is actually liquidity, right? So we want to see always for our setup some form of liquidity, which is in most of the cases already the imbalance, but sometimes it is giving you additional liquidity. So let me show you that. For instance, here, this is also liquidity, right? So the imbalance of it, again, one more time, imbalance is this wick and this wick not meeting each other in this 3 candle formation, and we expect then, because of we got the imbalance there, price to come in to just fill this imbalance, but ideally to top in our supply zone, because we know institutions made this move up to liquidate people after they stage the market to be bullish, but in reality we see it's bearish, and that way they brought a price crazy to the downside. And yeah, right now here, like I said, we have the liquidity in form of the imbalance, but we also have the liquidity in form of another push up. Okay, so that means this one is also another form of liquidity because it swept the imbalance. Okay, so it kind of filled a little bit of the imbalance, a part of it. Then it created one more time a high, but here interesting is it did took out the low. Okay, so if it does take the low as well, that means that people already got here liquidated to the upside and to the downside within this movement. So that way, you know, you have extra confluences in situations like this that, hey, we get even more liquidity right now for our supply zone. And that's exactly why the supply zone then it is working like it works, okay? So I have two forms of liquidity. Now, what else do we see here? Do we have another supply zone in this full context? Yes, we have another one. Look at this. These are just wicks. And like I explained to you, I'm not a fan of using right now wick supply zones. But you will see on the lower time frame that this is not a wick in that case. But look at this. Where is the imbalance? Well, you have here a pretty big imbalance, you know? So you have a pretty big imbalance here, or you could also say that this is the imbalance, right? And this is already the first try to fill in. But you have the imbalance there. And that means here, because also here we have the same thing. Price made an up move candle. Okay, so it's actually this one. So many would say now, hey, isn't this my supply zone? Shouldn't I map it out like this? Well, you could, but this will not work out because there isn't really a clean imbalance in this case, as you can see. I mean, yes, there is a small thing here, but more than likely, a situation like this is unfortunately not always clean, at least not from this time frame. On the lower time frame, you will see what makes more sense and whatnot. And the real break of structure, because that's what we like to see as well in order to get even extra confluences, how strong a supply demand zone is or how relevant it can be, is you can see from here, yeah, the whole market just broke structure. And this is like the next OB, because that is not a clean imbalance. It's very small, you know, it could be a valid supply zone still. But yeah, as you can see, it did not work out. So this is why we need to have more time frames. Only one time frame will not tell us always what market is about to do. Because even if you look to the left here, for instance, you can also see, look at this one. Also, this one did not work out. Even if it had imbalance, it did not work out. Price did not return to it. But it kind of returned to this here. Okay, this is hard to tell because it doesn't have a wick, but more than likely it filled in reality just the imbalance that was here available, and that's what they filled, and that's all what price needs to do. And this is the problem: if you just focus too strongly on one time frame, you would just miss out on so many opportunities. And in order for us to not that we don't need to trade off of imbalances, what we do is we just use multiple time frames, and that way we can clearly see what price is about to do. Now look, for instance, at this supply zone here, because I like to show you not always the perfect ones, because the honest truth is the perfect form of supply demand and basically every concept that we use doesn't really exist that often, you know. So you need to learn also. I mean, of course it exists often, otherwise I would not introduce you to that. But there are a lot of options where it looks a little bit different. Like in this case, you do not even have, in this case, imbalance. Still the price comes to it, okay? So in this case, you can see that this is the break of structure, right? And from a weekly standpoint, you know, you are right now in this context here, so you need to view the market from this to this. So of course it will come to this form of supply zone, because you can see price is strongly moving down, and that's why price comes here to fill in something, because it already looks like, you know, it needs to get to fill in here something. And yeah, that's in this case the case. Okay, I would just go right now to the next time frame. Let's go to the daily and let's have a look on the full situation right now from a daily perspective. Well, first of all, this one where we just had the wicks, you can see clearly, hey, now it makes a little more sense, right? This whole thing, you can see here the last up move candle before it dropped down. And where is the imbalance? The imbalance is from here till here, and that's exactly what price wants to fill. And as you can see, it's even giving us a perfect touch at this supply zone. Now, many of you would say, hey, why don't you map out this? Yes, it is a possibility, but what we don't like about this supply zone, just from the start to explain you, is it is laying at trendline liquidity. So if the price in the situation will come to it, you know, to make the mitigation, and if it is here, it is, from my point of view, just too risky to sell from it. Even if it makes sense, you have a concept which will speak against it. And in this case, the liquidity will speak against it, which means, hey, yo, the price says, I want to target that. And maybe it will then move somewhere in the other supply zones, right? So it could move then to this and move then down. And this is the honest truth, why in this case, the weekly supply zone, okay, which was this one here, well, we identified it to be liquidity, well, we identified as very small imbalance. If we stay here on the daily, you will see that in reality, if price didn't just mitigate it here at the beginning of the supply zone, it would have been in reality really coming all the way back up. So you would have been to refine it like this. You see there a clean imbalance, and you would say this whole thing here is my trendline liquidity, and price would just come, hunt this, and will move down. So this is why in this case price just tapped it here. It did not tap it here because then it would have been invalid. It taps it on the full range here, okay? Because we could view this right now from a daily perspective like this. We can view it like this, you know? I would view it exactly like it is here. The last up move candle, right? Candle, but also up move, right? Before the down movement. That's the real definition of it. And yeah, we have the imbalance and we just want to fill in the imbalance. And as you can see, after we filled it, we even touched the supply zone, and that's clean. Okay, so the imbalance can be interpreted right now like this. Of course, you could also say, hey, this is also my imbalance right now because these are my 3 candles. But yeah, more than likely, the real imbalance is this in this situation. Cool. So yeah, that was the daily right now in this scenario. Let's have a look on the daily, for instance, on a cleaner situation, which is this one. You have like this full block, which is the weekly. You would have here the same. You have this supply zone, but you also have this supply zone. Okay. Now the thing is, on the weekly, if we just come here quick to the weekly, our imbalance is from here till here, which we need to fill. We then go to the daily, and what we see is, okay, the imbalance starts somewhere from here. On a daily perspective, it is basically just this and this. Okay, so let me just delete it. So it makes sense, right? The imbalance got already filled if price would just tap at this daily, and that's the reason why it just choose in this case this supply zone. Of course, the possibility will still here price will move up higher, of course, not saying that this is not the case, but in this case you also have a supply zone which has liquidity here, right, which build up additional liquidity here, and it will work down, you know, it will work out at least, you know. If it would just go for a small pullback, no matter what, this supply zone is definitely worth trading it, no matter what perspectives you have. Because if you look here for just a small movement, you know, the movement was still 240 pips, right? So that's already more than enough for us that we can consider this as a valid supply zone, even if it would have been then failing and it would have been going all the way back up. Then we have another opportunity and then probably this, you know. So in this case, like I said, you never know 100% right now, okay, which OB will work. You know you have both OBs. You know where liquidity is. You know what kind of structure perspective you are. You know you're bearish, which means at some point, you know, maybe we'll just continue and follow the trend. I will go over more specific examples on how to combine all the concepts then later on, of course. In this case here, I'm really focusing on you just to have an eye for which OBs are relevant for us and which are not even relevant for us, and how to interpret it always the right way, because we have, like you see, many options, right? So everybody who's just selling, who is just saying to you, hey, only pick up these OBs, man, you will miss on so many opportunities. You would not understand this movement and also the next one, which I'm going to present you now. Because if you look here, for instance, on this example, where is right now your supply zone on a daily time frame if you need to refine that? Well, first of all, you could just use this here. That's an option. Do you have an imbalance? Of course you have an imbalance, because this one doesn't meet with this one, so there is an imbalance between. You could say, yeah, this is my OB perfectly. Now look at this. Price didn't come to it. Price in reality just came to this here, and it just totally reversed from this OB. Okay, so what we need to understand is that price will just use any form of OB. It can use any form of OB. Of course, this one is much more, I would say, from the start, more relevant. This one is something which I would not even look that precisely at it. I would need to go lower on the lower time frame to understand, okay, if this one makes sense or not. Because also this one makes, of course, sense. It has imbalance in it. You need to view it like this, the full candle. I just refined it already to the wick. So normally you should use it now like this to understand, hey, this is my supply zone, this is my imbalance in between, this is my liquidity, and it's just using this liquidity to come and mitigate the supply zone and then to drop down. Let's just go into 4 hours. Let's go one step down lower, and let's see how this is playing out. So this is right now the situation. This is the daily. Now, if you look at the daily and you refine it down to the 4 hours, you will see from the start, hey, this isn't that nice OB anymore. Why? Look at this. This one here could be your OB, this, for instance. You would have here a small imbalance. Or is it an imbalance? You know, it's already hard here to tell, is this an imbalance or not, what you see there, because you cannot really see it pretty nice. This one could be also your supply zone, but as you can see, you don't know if it's this or it's this. So it's already from the start not clean what kind of situation you have here. And this supply zone that did not even broke structure. Now this is not 100% something which I want to see every single time, but ideally it does. And this is the thing, you know, it is still part of this bullish movement. We understand that from here, the institution initiated this up move, right, to make this liquidity sweep and then to move, of course, down. We understand that. But we also understand that potentially this up move got already partially mitigated here, right? Because this is the 4 hour right now in this case, order flow. Okay, so we go right now over order flow because you see here what step-by-step mitigations, right? So you got here in supply zone, okay, we move down here, we broke structure in reality. So you see how we wick down below. That's already a valid supply zone at that point. We went lower. We have a new supply zone, which we go down lower. We have clean imbalance. Okay, we got even here liquidity, right? We fill in the imbalance, we move down, and so on. Here the next supply zone, order flow, order flow, order flow. So what we see here already from the start is, hey, this is liquidity, right? So more than likely, price, if it will come here, nothing will hold. Even this one, this is a valid one at this point, will more than likely in a situation like this not hold if it will come. And look at this. price do not even come to this level, because this is already too extremely laying at liquidity. So if price would touch into it, more than likely it will go up higher, and more than likely even this one here at the top will not even hold, because it did not even made a BOS or something like that. And it just shows us, okay, the order block, you know, the real order block is here at the low, and the order block was just initiated, you know, to take out liquidity from here and then to move rapidly down so that they can open up their short orders from the top. So they are not interested right now in closing the buying positions from the top, because they initiated them already here. And we see here a traffic, right? We see traffic. We see how they already closed here multiple buying position already. So more than likely it looks like the full thing here, everything here is already kind of mitigated till this point here. And then we just need to look here for the next OBs that are the next one where the institutions is looking to do something. And in reality, it is nothing else than this OB here that you can see. This is the next OB, which makes sense. And it's exactly that one that will work out, because you see in the first place imbalance it has, plus here is your liquidity for it, right? So it will use this liquidity. As you can see here, the first time it grabbed the liquidity to build up more liquidity, and then it tapped into it, and then it's moving down. Okay, so pretty nice example. Let's just stay on here because we can learn a lot about this situation even on the lower time frames. Okay, so makes sense, right? You got liquidity here. This one, like I said, will not really work out because it's laying us at liquidity. So personally, I would not even map that out. Now, this is the point where you can just delete the other ones, because you don't need right now to see the full daily and weekly supply dimensions anymore. This one is not valid for me, as we are right now already, as you can see, in a total new context as well. Price just moved down. You know, we broke from there some very significant structure and so on. So we are right now somewhere totally else. So we need to look here. Let's go down right now. Oh, I've been on the 2 hours. I thought that I've been on the 4 hours. Yeah, 4 hours, it's the same, right? It's just a strong up move candle, so would result in the same. But 2 hours, to be honest, look even more nicely. So this is why I have here more time frames, because sometimes I just don't like how the OB looks like. So this is why I just go then on the other time frames to look on it. 1 hour, yeah, pretty the same situation. Nothing relevant right now for me, and I hope that we can go to the M15. Yes, we can go to the M15, and this is what I do then. I go here and I start refining here something. I start refining here. But very important is I don't want to over refine things, because over refining things can just lead into you losing this position. Here in this case, pretty clean. The first one is just liquidity. Why? Because price from here is just moving down, and it is obviously acting as a source of liquidity for the upper one here. So now you could say it is only strict this one. This one is just say it up front, can be risky. As you can see, it can be risky. Price will move up. Why? Because technically, just refining a supply zone like this, you have one big issue. You cannot cover up the high. And as we all know, from here till here, they're manipulating the price with the up move. So we, in reality, do not really know where the institution have their orders. We just know right now, yes, there is an imbalance. Price will more than likely fill the imbalance, will move down. For sure, it makes sense. But what you have here for a problem, because you could refine it like this, but only if price would be super recent. In this case, you have here a very, I mean, look at this, how I need to even scroll, right, to come to this. Look at this, how long I need to scroll just to come to this price action. So there's just too much time in between. And whenever there's just too much time in between, from this perspective, because it moved that crazy to the downside, this will not be that relevant anymore. If we are in this context here and price wants to come up higher, of course it has the chance to come to it and to go down. Okay, if it would make sense. So personally, what I do in this situation is I just let it like that, right? So I try to not over refine it, because I know probably this is acting as liquidity and so on. So I do not really care about refining it too much, because what I will do is I would just go here and see how price is reacting from. Because this way I can also confirm my trades, right? I don't always need to have the refinest point ever. M15 is already a pretty refined thing. But of course we will refine it all the way to the M1. But in this case, this is a scenario where you should not really do that. Not in that context. But I will show you at what context. Now look, you have the M15 prices tapping into it, okay? And you want to see some sort of confirmations, right? You want to see some switch of order flow. And you can see price is starting here to establish some form of order flow because it's moving down, you know, breaking structure after structure, moving down lower and lower and lower, right? So this is a form of order flow. We can just go right now on the lower time frame to understand how it looks like on the M5, for instance. And I think I cannot go to the M1 because it's right now too far. But look at this. You tapped pretty at the extreme already, right? Till that, structure and everything has been bullish, right? Everything has been bullish here on EU. Moving up, okay, look at this. Everything got respected and so on until point really hit it, the very refined point at the top, which you could have been refining. Maybe on the M5, you will have here an OB, and that's exactly where it's pointing at. And then you can use this and to follow from there potential order flow. Because you see right now, yeah, you expect already price to go short, right? So let me just make it clean. This is your supply, right? This supply is not a valid supply at that point. It's only valid after it breaks something, right? But still, you can see price starts to establish order flow. On the M1, you will have already your break. M1, that's already the break, and that's why you can, what I identify right now is already the M1. Moving down, so that would have been in this case your first potential entry based on the M5, because you broke this, you go lower, right? You are right now already in this bearish order flow then, right? This is the substructure at this point, and you can see liquidity, right? And this is your entry at the top. So you could just easy trade this down at this point. That's exactly how you could do it. Put your 1 pip. And that's how I like to refine it always, to just put the supply, so my entry area like that I'm protected from the high, right? Because I want to be at the extreme. This is how you can put it. And I will just let the price to take me in. This is, I just place 1 pip and I just want to, rather I do not get in the trade, but I want to have the best position by myself. And this way you can enter it. And of course, with the order flow, you could take multiple entries. It would just get, the more price is moving down, the heavier it will be for you to really get that entry, because price would just get more manipulative the more it's moving. Yeah. That could have been, for instance, your first 150 R trade if you, of course, determine it right now at the top of where the price is. Here, taking out some form of equal lows, or yeah, just a low and not a real equal low, but yeah, taking out a form of low from here, and price then starts to total reverse. That was right now an example on how we can refine everything. Let's just go over a most recent example, and probably, yeah, something which makes more sense to you, because right now this is example where I refine it from the weekly down to the low ones. You know, that's how you could use this. And look at this, if you are at the right point, you could really hold this trade for a very, very long time period. Yeah, let's just have a look on this example. So that was our daily. Here 4 hours, look at this. In this case, you would have been getting trapped if you would have been using it perfectly, like the textbook example will tell you. However, you could map that out, but you will not really get your confirmations in these kind of situations, because look at this, price is just moving up. So you have absolutely no chance in reality to really take some form of entries at these points. So you can see it already looks super messy. You know, you can already see the thing why it's not working. Why? trendline liquidity. So it's really obvious trendline liquidity here. Everything is mitigated except of the last one, right? But it's just exactly a liquidity, you know, and this is why it would just not work. So it's order flow, right? Here, when you start, of course, it makes sense, but this is just liquidity. So you see how this big spike occurred. So more than likely, somewhere within the spike, there is the order where the market is now looking for to finally close, but it needs to be above this one. So if you go now to the left, you see exactly that is the case. This is how price will go and tip into it. Okay, so now, for instance, here you could then as well go and refine everything. M15. I cannot refine it more because it's already pre-refined. But look at this, price just pushing. So it's not even giving you any sign of rejection or confirmation or anything like that you're waiting for. But what you see is, look at this. If you stay on the M1, and you want to confirm here like your entry, I mean, we do not go right now precisely over confirmation. But what we do look is just to understand right now order flow and all these things is, look at this. Price moving down, moving down, moving down, right? Order flow, order flow, order flow, order flow. Until some point, you know, it will not be order flow anymore. It will just get liquidity because price wants to come and to mitigate something here at the top, okay? And in this case, in reality, what it mitigated was exactly this thing here, which didn't really have a clean order flow. So it's this point here. Imbalance, everything, that's what price wants to use. And then again, price is establishing some form of order flow. Look at this. Not ideally, but everything here is at the end a form of order flow until it will not be order flow anymore. Look at this. And so on. Okay, so this is how it works. So this is how you need to refine. You always need to refine everything down to the lowest time frame possible. And then looking for price to shift and all these things. But we will go over entries, of course, in a total separate video, very precisely on that. But for now, I just wanted to show you how you could actually, refine everything down so that it makes sense to you. Also here, what do we have on this kind of situation? You have the daily supply, right? So this is the daily supply. You see here, liquidity. You see here, imbalance. That's what you want to see. This is how you really classify high probability trade setups. What do you see else? You see order flow, right? You see how price is already doing here a step-by-step mitigation. So you do not expect in this case price to come up higher in this context here because you expect price to react from that. So you go right now 4 hours to refine the supply area. And what you see is, look at this. You see here a clean supply zone with imbalance here in between. I know it's small and so on, but here this one you cannot use because it's again liquidity. So this is why this supply zone will not work because you just have equal highs at it. It will just simply not work. You need to always choose one where you have imbalance and where you don't have your liquidity just added. For instance, here, yes, you have liquidity. You have here liquidity. This is exactly the reason why price did not went all the top to it. It just reacted right at the start. Potentially, if you look at this, you could say, yeah, but if this will just react at the start, I can take it. No, this one is just too small. In this case, you know, it's way too small. So you do not expect that. This one, you know, is much more bigger, and as you can see, it already absorbed this liquidity here. It absorbed this liquidity, this. It absorbed already a ton of it, right? You can see how this push went up higher because it absorbed everything, and then it's moving down because that's the real OB that I wanted to go for. Okay, so that's how you refine it. Then you can go to the 1 hour. You can make even more precise refinements. As you can see, it's not the perfect touch from the perfect touches in this case. But yeah, it could be in this case, for instance, this OB doesn't need to be that one that I mapped out. It could have been even possible to just say, hey, you know what, it is this one. And then you see here what? liquidity. So that's right now not relevant for us. Why isn't it relevant for us? Because we just understand, hey, we are in some form of supply range. And this is why it's important to not always over-refine things, right? It's really important to not over-refine things. But from a 4-hour perspective, I mean, you can see it clearly. That is what you want to see. That's exactly what you want to see. And this is actually, this whole thing here is just internal liquidity. And you then are anyway just interested to see how price is reacting from these supply zones, right? Because that, look at this, is this a touch or not? I would say this is a touch, right? So from my point of view, I would say this is a touch for it. It's valid to view it as a touch. And then you can see how when price is always hitting some relevant OBs, it will start establishing order flow. It will go down and it will establish order flow. Okay, moving down, then here, and so on. Order flow, order flow. Order flow, order flow, order flow. You can see it's not always liquidity in between, but sometimes it is. Here it is liquidity in between. Why? Because what price wants to do in reality is to come here to fill in the imbalance in between and to mitigate the supply zone step by step. So this is not the right OB to choose from. To use this one, this is stupid. This is not how you should use it. This is totally incorrect. Here in this case, the same. Normally, I would say, hey, you're looking for this to enter. You see, you do not get your entry. Then it's trending to move down and it's reacting from somewhere else. Still risky, but what it did here was it did took out a low. So it went lower. But still, here you had the option that price will come up higher. And this is the point that you always need to view it in the right context. So here in this case, at this OB, I would not take it. Why? Because the chances for high price will return to it. However, we do expect price to move down as we are in a relevant supply zone. So this is why you should not expect that too much. But this one already makes sense because you broke structure and what you have is here your liquidity. So it's taking out liquidity and it's moving down. Okay, so that's the new context. So at this point, this was possible because this could have been your liquidity. However, that wasn't in this case the liquidity, but this is something you cannot know at that point because it's just using the full range to mitigate. So you should still keep an eye on this, but the moment when price is making this movement, you should not keep this on track anymore because it's not the next laying OB. It's not the next context. You need to always view the context where you are. And this is your new context then. Price is moving down lower. You can even see, hey, we even took out here something. Hey, this is my liquidity already. So people would think, hey, this is the OB that will work out here, even liquidating people to the downside. And then what you need to understand, hey, this is my OB and I just go down from here. Pretty simple. So even here, we could even refine it pretty nice. Right? Then it's moving. And so on. Let me show you another clean example from today. What do we see here? For instance, just if we need to map out some OBs. Many would say this is OB. This is a valid OB. And as you can see, it really worked out. It really worked out. But only a little bit. Because what's the problem with this OB as well is you have liquidity here, right? So the top will work. So this will work. But as soon as the OB will be getting hit here, it will not work anymore. Even if you say, hey, we do get a deeper touch, because you can technically touch an OB 2 times, for instance, right? You can touch it here, and then you can touch it one more time lower. But as you can see in this case, even if that would be the case that it's touching lower, you cannot really expect price to do this because you have liquidity just laying below. So here, what do you see here? Order flow. Okay, it's not always clean, guys. So do not expect price to always be clean. Very often it is messy. Messy, messy. You see how messy it is here, trapping you. trapping you because it still wants to come somewhere here in this top here. So you always need to be aware of where you are, especially if the price is taking out some form of a low. They will get aggressive, right? And in this case, in reality, this is not the order flow. Okay, just to explain you, this is not the order flow. Price, indeed, this is right. Price is creating order flow, order flow, order flow, all these things here, right? Everything cool. Until the point it's taking out some significant low, it starts developing order flow in the different direction. Oops. It does take here something, right? So here, that's a problem. You need to understand further more context. But I just want to show you now and to illustrate you now that this is how order flow gets in reality created. So you see, here, this is right. This is order flow. It is order flow. At some point, it's taking out a high. So like we discussed, look at this. This is the higher time frame structure, right? Moving down. Boom. Okay. It always needs to mitigate something. And in this case, this one was not mitigated. And that's exactly the reason why price came to it to move up. Because there was still a mitigation needed. And you have here still your liquidity that the price needs to take out. Okay, so that's super relevant that you understand. Whenever a high and low gets taken out at that point and so on, price could just potentially reverse the full order flow. Okay, so this is why order flow is always right. If you determine, for instance, this is the right POI. Okay, the top of this is the right POI. You will see price establishing order flow around that POI. It will go down lower until it will take out something, and then it would totally shift. And so on, until we take out something, then it will again do a little bit of shift, and then it will again continue to move up higher, and so on. That's basically at the end order flow. Let's see if we can see here some nice example on order flow. The problem is just with order flow, it is just relevant, like I said, in a specific context. Okay. And this is why people always try to identify this concept, but they do not understand how it works. So, for instance, you see here, demand, we take out a high, and so on, and we're bullish, right? So let's just map out here till this point order flow, this full thing here. Pushing up, look at this. That's the point I want to explain you. Price is moving up higher. It's breaking some form of structure, right? So it's leaving here liquidity because this demand is still one which is not mitigated. So it needs to go and to mitigate this demand area, and then it continue up higher. And look at this. People think when price did this, it will continue specifically from this point now higher because it's creating here something, right? We know this is not the right order flow. They would say this is the order flow from that. Okay, because you have your liquidity here and so on. So this should be the next order flow. That's simply not the case, because what you need to focus on is, hey, I'm on a higher time frame right now, right? This is a 1 hour, a 4 hour bullish demand right now. And we still have something which needs to get mitigated, because we are right now at the point when price took out something and price started to push down like this. We are in a pullback. So where do we go? We go to a demand area where price suddenly just took off. And that's exactly in this case this one. So this is our demand area where we want to see price targeting it. And this is exactly where price will return to it. As soon as price will come to this level, you can refine everything lower to the M5. So you can see here pretty nice M5. You have here a clean and nice imbalance. Right? If a clean, nice imbalance in between. So it will admit it as liquidity here. And then you will see price starting to establish from this point order flow. So if I go right now the M1 to make it even nicer, you'll see price is moving up higher and so on. And what it's doing here is starting to establish order flow. And you need to always go then really from that relevant point. So more than likely from the extremes very often. Price establishing here some form of order flow. So look at this. This is also order flow already. This. Moving higher. So here. Order flow. Order flow. Here again, you have a trap, because it's the same principle on how this was a trap demand. The same as in this case, people thought about, hey, I need to buy from here. And that is a trap demand. But look at this, you can see it already here, right? This is the same example like this. You did took out something and you want to come in to refine something. In this case, this demand. You see here, you have your liquidity. That's what price wants really to go for. We can look at 5M. Yeah. Would be in reality on 5M the full block. But yeah. M1 is already cool. Already showing us what we really want to see. So this is a trap, price move down, hunting this, and then you see, okay, I can buy here. But of course, this will probably not be that possible. More possible will be then just to wait for the reaction. And look at this, price did broke here something, so ready for pullback. Price did broke here something, so ready for pullback. And here internal, you will see how many liquidity points you are until price will then finally take off. And then again, it will start establishing some form of order flow when it's moving, but that's not what I recommend you trading from. Okay, because that is just, yeah, it's just risky and so on. And this whole order flow, you know, it will maintain till a certain point. Look at this perfect order flow until price will again take out something. So now on M15, you know, it will till this point. And then we know again, we're ready for a pullback. So what price is doing in reality is then again, look at this, establishing here some form of order flow. Until the next relevant point will get taken out. So here, even nicer. If you have something like this, right, people would just say, hey, yo, it's time to go bullish, right? Because you can, in this case, even identify order flow on the other side as well, for instance. But what we know is that we need to take out this. But we'll come to this later on because this is a new, again, we need to learn to put everything together. Here in this video, everything that you need to really learn is just to understand that we want to look for order flow, and we know order flow can be at some point liquidity, and at some point it is protected because it will maintain that one specific direction. But at the same time, once a relevant high or low will get taken out, it would just go against order flow. It will just hunt the full order flow and then will continue again in the direction of the order flow. But that's hard to explain here, guys, if we just can use right now in this video right now or only order flow. So I just wanted to illustrate you right now in this video what order flow is, how you map it out and all these things. But this is right now not on how we are going to use it. Then at the end, I will show you how we will use it perfectly with all in combination. But as you can see right now, that was already pretty cool how to refine everything down lower and lower and lower. But then, of course, we'll wait for confirmation entries and all these things. So more to come in the next video, guys.